QuickBooks Pro Desktop 2021 short-term investment sold. In other words, we have a short-term investment on the books. We're going to sell that short-term investment, recording the sale as well as the gain or loss related to it. It's time to get into it with Intuit's QuickBooks Desktop Pro 2021. Here we are in our Get Great Guitars homepage. We currently have the open windows open. You can open the open windows by going to the view dropdown and selecting the open windows list. We're going to be opening up our financial statements to start out. So let's hit the reports dropdown up top, going into the company and financial and on down to that balance sheet standard. We'll change the dates up top so we can get the range by customizing the reports and then changing it from 01/01/21 to 12/31/21, January through December 2021, and okay. Now, in the prior presentation, we had recorded a short-term investment on the books. Notice that a short-term investment can take different forms on the books. In other words, we might be investing, we're going to imagine here we invested in stocks and bonds. We put our money in like mutual funds for a short-term type of investment. You also might put money into a short-term investment for like a CD or savings type of account. If you put money into like a CD or savings account, it might then expire at some set point in time. We would call that maturing. It would then mature at some set point in time. And if that was the case, then it might actually default and then go right into your checking account if you set it up with your bank basically to do so. If that was to happen, then the investment that you put in our case $12,000, then would get a return of something greater than the $12,000 because of interest. So that will be the key there. We'll have to record the interest that we got on the investment and move the investment from here basically to the checking account, converting one asset to another asset, and then the fact that we have the gain on the interest. If we have stocks and bonds, or we put some money in temporarily into a mutual fund or some kind of stocks, then we sell it. Then we might have a gain or loss related to the sale that will take place. Once again, we're going to have to decrease the investment account, record the difference as a gain or loss, the difference between the cash we got and the investment account as a gain or loss. That is going to be an income statement account. So either way, from the checking account side of things, we know that we're going to have an increase to the checking account side of things. We know that the investment account then is going to go down, but another account will be affected. Therefore, we have three accounts that will typically be affected, at least in this case. And that's a little bit different than normal. So we have to pick up another transaction with basically three accounts that will be impacted. Also note that if you want to get into more detail on these investment type of accounts, I'm not going to get into a lot of detail here because it would be something that would be particular to a certain type of business, one that basically invests, or you might use QuickBooks for your personal investments and track your investments in that way. So the question is, how much detail do you want to have in QuickBooks? In other words, you might put just the total of your investments in here, or you might break it out by your investment company. For example, if you invest in like a Vanguard or an E-Trade or your bank, you might break it out by those companies and then just summarize your entire bank statement balance here, and then have the more detailed workout of the daily increases and decreases to your stock accounts provided on the statements that are provided to you, or possibly an outside software that it's more designed not just to give you the lump sum financial information, but to be tracking, the changes that are going to happen on a shorter term basis. Your bookkeeping over here, typically the software is used to basically tell you where you stand at a point in time, and even then at a periodic point in time. It's not really designed to be tracking the daily swings of investments. So if you want software to do that, then you might want to get software to do that and then adjust this account periodically to like monthly. So now that your monthly statements reflect what happens on a monthly basis, or maybe even on like a yearly basis if you're using this in that format. Okay, so we're going to say that we're going to sell this here, and we're going to sell it for $12,250. So when we sell it, we're going to get $12,250. Therefore, the deposit in the checking account is going to go up by $12,250. The short-term investment is going to go down, of course, by $12,200. The difference is going to have to be recorded in interest. Now, this is not a normal transaction. In other words, if I go to the home page, this is not something that's typically going to be in the normal flow chart, because we don't do this every day. So that means we're not going to have a form related to it. So we're going to go through our thought process in terms of, how do I record this thing? Well, the first thing is there a form related to it? Because if there is, I want to use that. So I'm using the functionality of QuickBooks. If not, then I will typically ask, well, is cash affected? And if it is, maybe I should use the cash register. In this case, it is. because we're going to have a deposit. So I would use the cash register there. If cash was not affected, then I might then go and say, okay, should I enter this with a journal entry? And if I do I want to use a register type of journal entry? Can I use a register, or is it too complex for that? And then I default to just debits and credits to just a normal journal entry. So to me, cash is affected here, so I'm going to do it with cash. You could use a deposit screen, deposit form. I typically would not. I want to use the register, and I also want to just show you how to use the split feature within the register when you have multiple transactions or multiple accounts you need to be hitting. So then we could go to the banking up top. You can go to the use register here, or I like to go to the lists group and then go to the chart of accounts. So here's going to be our chart of accounts. Now this register, remember, you can use a similar kind of register for any of the balance sheet accounts. So just keep that in mind. If you double click on the checking account, that's going to be a checking account for a register for the checking account. We're going to enter this in as of 020621, 020621. Now this is not going to be a check, but a deposit. So I'm just going to type in DEP. The bottom line there is you just want to make sure you delete the check number so that the automatic check numbers will be populating properly after that point in time. I think this was Vanguard that we invested in, so I'm going to type in Vanguard, and then it's trying to remember the last transaction because that's what we had on the default settings now. So it's say, hey, last time you did Vanguard, you made a payment and put it into short-term investments. We're going to say, okay, but yeah, we're changing it this time. We're going to change it this time because I want to deposit this time. And now we got another 250, so it's 12,250. So make sure you're on the deposit side of things. And then it's going to the short-term investment, which is actually correct because that's going to be going down now. But I need another account because now I need two accounts here. So I'm going to say split. That's where this little split thing comes in. And so now we can add two accounts. So now we have the short-term investment. It needs to be going down by just the 12,000 to bring it down to 0. And you could say sale of investment, something like that. It's not going to be a job or billable. And also note that this split field is nice because it allows you to have the capacity to enter a job and make it billable type of activity, which you can't really see unless you use that split feature. And then we have the investment, then we have the income. Now the income is something that we may not have here in our default schedule because we set up our default chart of accounts to be for a particular business that sells inventory, and we don't typically have gains and losses for stock sales oftentimes. So you might have interest income, for example, here. They might give you interest income. Doesn't look like it. So that means we're going to set up another account for this. Now, when you set up the other account, you could think about it a couple different ways. You could say, well, it's going to be income because it's going to be a gain up top. So you might think I should put it into the income account, and you could. But oftentimes, like something like a gain or interest income, which isn't part of our normal day-to-day operations, is kind of like an unusual transaction. We might want to record at the bottom so that I can then get my income from operations, my income from normal operations, and then at the bottom, after I get that subtotal, then I want to see the interest income or the gain and loss type of income because it's not part of our normal business transactions. And that gives me a little bit longer of an income statement, but a little bit easier for me to look at and see what I want to see, which is how did I do in operations, and then how much did I get on like kind of weird stuff that's outside of operations, such as sales of investments. So I'm going to call it, now also I'm going to call it gain and then loss on investment. And so you could record the gain or the loss separately. I'm going to put them both into one account so that if I have a gain this time and then I have a loss next time, it's going to cancel each other out. So I'll see the net gain and loss in this account. You could break it out and just show your gains separate and then your losses separate in two accounts. I'm going to group them in one so they'll basically net each other out. So I'm going to say tab. We're going to set up this account. And now it's not going to be an expense type of account. And even if it was a loss, it wouldn't be an expense type of account. I want to put it into basically other income, and you could call it other income or other expense. And notice this is the point that's a little bit confusing here because here it's income. We're hoping that the net will be income. If I net out my gains and losses, hopefully it's going to be an income type of thing. I'll have income. If you break out the gains and losses into separate items, Then you'd have other income and other losses that you can break out 2 categories down here: other income and other losses. If you happen to have more losses than income, then it's going to show basically as a negative number in the income area, and that'll still be fine, so it shouldn't be a problem. So we're going to say okay, and that looks good. I'm going to say save and close. There's our 250. I'm going to put another sale of investment here. And so there we have it. What's going to happen when we record this? It's going to increase the checking account by the $12,250. It's going to decrease the investment income to 0. It should go down to 0. And then we're going to have this gain that's going to be on the income statement at the bottom of the income statement, even though it's revenue, which is typically on the top of the income statement, because it's unusual income and we put it into other income. So I'm going to go ahead and record that. We'll say record. And then let's go into our balance sheet and check this out. If I go into the checking account, double clicking on the checking account up top, we see then this transaction. This is going through. I got a little bit confused because we recorded. Notice that this one's going to confuse us the whole time, or confuse me the whole time. Maybe it won't confuse you, but I had this transaction that we recorded in the future because we wanted to see those 2 payments happening, you know, side by side, to see the difference between them. So this is the one we want. This is the one we want. The $12,250. If I double click on it, notice it's going to a deposit screen, even though we entered it in the check register, because the deposit screen is what QuickBooks will typically use anytime you have a deposit, even if you enter it directly into the register. So I'm going to close this back out, close this back out. The other side was in the investment account. So the investment account has now disappeared because it's now down to 0. So let's open up the trial balance. Typically, I like to look at the trial balance in these situations. Reports drop down, accounting and taxes, trial balance, changing the dates up top from 01/01/21 to 12/31/21. So there's going to be our trial balance, and we're looking for the short-term investment right there. Double clicking on that item, and we see it going down to 0 at this point, which is what we would expect there. So I'm going to close that back out. Let's then go to our reports drop down. Let's go to the company and financial and the profit and loss. And then I'm going to change dates from 01/01/21 to 12/31/21. So there's our income statement, and notice the gain is down here at the bottom. Now that's not, notice what that does is it makes it a little bit longer, a little bit more convoluted than us. We could have just put the income up here in the income line. So it makes this whole other subsection, which increases the length of our income statement, you know, relatively substantially. But it also gives us our information where we can say, hey, look, this is my normal net income, my like ordinary net income, not counting the unusual thing, which is a gain or loss on investment, which it doesn't happen all that time because that's not what I do. That just happened to be some particular thing that took place. You might want to do the same thing with the interest income, and we might actually move that down just to show you how to do that next time. But this is where we are at this point. Here's the balance sheet, so you can check that out and check your numbers. Here's the income statement at this point, and then here is the trial balance, so you can check your numbers with that as well.